Mario, thank you so much for joining us. First up, let me ask you about the impact of tariffs from Mexico, Canada and China, and how concerned you are that Europe could be next.
Thank you. Thank you for having me. Well, tariffs defined this way, they represent a negative supply shock. And as all negative supply shocks, we will have an inefficient reduction in output and an increase in the price level. That means inflation for a while, and then we can even expect prices to go slightly lower, depending on how we adapt to the tariffs, how the economies react, and technology. So these are not good news for anyone.
Mario, that's the point, isn't it, around market distortions. If we end up with more product on this side of the world, whether that does mean we get more disinflation. I know you've been pushing for a 50 basis point rate reduction even from last year when you spoke to me in Washington, D.C. The ECB didn't discuss and they didn't go for it in the latest meeting. If we've got tariffs coming in Europe, does that mean the ECB is actually behind the curve in cutting rates?
Well, we will have to see exactly what those tariffs will mean, if there is retaliation or not. Globally, we will see some more competition in global markets, and that can bring even prices low in other regions, other those affected by tariffs. So we need to see how everything develops. The European economy is not growing. The 0% growth in Q4 2024 is really not good news for Europe. We have a trajectory very clear that we started already a few quarters ago, and we need to continue that to be sure that we have an economy that is consistent with inflation at 2%.
The Draghi and Letta reports have been very big in economic circles. A lot of deep reading about the consequences here, where it was pointed out that other countries like the US and China are not playing by the same rules. As we talk about tariffs today, do you think Europe should also retaliate if it is targeted with US tariffs?
Well, that's a decision to be taken. It's not even on our mandate. Let me instead tell you that we see the cyclical position of the euro area deteriorating in recent months. This is important to see in a more general equilibrium setting what inflation can be consistent with this cyclical position, and monetary policy must do something to accommodate this. Then we have the structural dimension of European growth, and that's those are the things that the Draghi and Letta reports take on board, and Europe must move forward on that. We have this competitiveness compass that was just presented by the European Commission, and I think we need to focus on our response to our challenges. And then if time comes and we have to react to tariffs, I'm sure that we will do, but that's on a different mandate, not mine.
Mario, lovely to see you again, sir. Can I just ask you if it's possible for you to take off your Governor of the Central Bank of Portugal hat and actually look at it as a European and a former politician as well? Donald Trump's got a point, hasn't he? We've relied on US defence, but we don't buy enough US defence goods as well. We've relied for way too long on energy from dubious authoritarian regimes, and perhaps it would be better if we did buy them, some of our energy, more of our energy, off a democratic ally as well. Donald Trump has got a point about the imbalance between the protection of Europe and indeed where we've been buying our goods, hasn't he?
Well, let's make no mistake. Everyone has benefited from the dividend of peace. This is not an European thing. Actually, the war is in Europe right now, not in the US. So by all means, Europe is much more exposed to those threats than the US. It's also true that the trade imbalances with the US are different in terms of goods and services. It's actually much more balanced if we take the whole trade components and when we compare it with the U.S. This means that we cannot see things separated. If we commit that mistake, we will end up with solutions that are only partial, they are not sustainable, and they will take us to a position that is much more weakened for everyone than if we take all these things together.
Yeah, I hear what you're saying, sir. But in terms of how Europe should be in the 21st century, in the third decade of the 21st century, there was a beginnings of the mood music from the likes of Gentiloni, from the likes of Bruno de Maire, men you know incredibly well, for Europe to be more muscular on the international stage. Whilst there are trade discussions to be had, can Europe marry that with the United States, with being actually more muscular and more forthright on the international stage, and ergo fighting back against the likes of Donald Trump, who seek to actually put a very aggressive position out there first and negotiate later?
I tend to agree that Europe must take a much more forceful position in the upcoming months. It is also true, and I have been quite a critique on the position that Europe takes on these discussions. We are probably used a little bit too much to be sitting in the passenger seat. I think we need to take the steering wheel. We have the means to do that. We generate huge savings every year. We have to see them being reinvested in Europe. Europe has the means to do it. We are catching up with the US in terms of skills. And that's the way to go. I mean, we know exactly what we have to do in Europe to promote growth, to promote peace, and be an effective factor in world discussions. We just need to, again, as I mentioned before, get out of the passenger seat and take our destiny with us.
I don't think there's any of our viewers who disagree with that, Mario. Absolutely. Thank you for that. Final question for me, and I appreciate I'm deviating away from central bank land as well, which is what you originally came on to talk about as well. But do you have concerns that actually the United States' actions under Trump 47 is going to drive Europe closer to other powers in the world, i.e. the big power blocks such as China, and B, actually lead to a more transactions globally not taking place in dollars, because a lot of people in the global south have already tried to kickstart that process?
Europe is a very open economic region. We historically and geographically see it in a very strategic position in the world. This means the East, the South, of course also North America. And we need to take that on board. So I'm all in favor that we coordinate our actions with other regions in the world. It is very important for us also to use more efficiently our technological advantages that we have. We have a very powerful manufacturing sector. So I see all these things linked and together. We need to talk very openly in Europe also of a safe asset, because that will make Europe's financial system more secure, more trustable by others, so that investment in European assets can be made also easier. So, you know, we have a lot of things to do besides responding to Mr. Trump's tariffs, and we should focus on the first, and let's see what comes out of. Yes.
Before I let you go, let me ask you about monetary policy again, because we're looking at the exchange rate. Euro has slipped again versus the dollar. Madame Lagarde the other week was telling me that she's closely watching the currency. What impact do you see here of declining currency? Not quite back at the 5-year lows, but still heading back in that direction. Does that complicate the task of reducing interest rates if we're going to see the euro undermined by the dollar?
Well, the exchange rate will react to market conditions, and we are not targeting it. Of course, that may have an impact on inflation anyway, so we need to see all developments. I don't see us in the future targeting anything close to the exchange rate. Inflation in Europe is going down at a steady path towards 2%. We need to find the economy that is sustainable with inflation at 2%, and that's our main focus.
Mario,
on monetary.
We've just had on the wires today that Italian January manufacturing PMI is at 46.3. So that is very close to the 46.2 in December. Are you worried about economic growth in Europe if we are faced with more tariffs?
I am. I can very clearly and openly say to you that I am. This is one of the biggest challenges for Europe. We were not doing that bad before COVID. We reacted very well to the COVID crisis. But after that, with inflation, with the war, with the sources that we had in inflation, with the monetary policy stance, and with a very timid and rightly so fiscal policy response, Europe today faces challenges to growth that other regions in the globe do not have. And we have to tackle those. And of course, looking at manufacturing PMIs doesn't tell us nothing really good to the near term for Europe, and that's my main concern.
Mario, thank you so much for joining us today. Always great to catch up with you. Mario Centeno with us, the Governor Bank of Portugal.